everyone, welcome to part 2 of the Economic Recovery series. This video will focus on cinemas and how they will benefit from the economic recovery that is slowly occurring all over the world. I know we've had a little bit of a slippage recently in Canada, but my focus is really on the longer time frame. I will provide a broad overview of the cinema sector and will cover reopening as well as other potential catalysts. Reopening isn't company specific and impacts the entire sector, so all cinema companies stand to benefit from this. Before that, for those of you who are new to my channel, my name is Kashif Sheikh, some people call me Cash, and on my channel I focus on the markets. I provide my thoughts and insights on the stock market and really try to focus on sharing opportunities to build wealth. The COVID-19 pandemic has had a very strong negative impact on the cinema sector. So naturally, as things reopen and vaccinations increase all over North America, these companies stand to benefit. Looking at the graph, if we look back to the end of January 2020, Marcus Corporation is down approximately 33%, while Cinemark is down approximately 35% over the same time period. National Cine Media is down almost 42%, while AMC is up almost 57%, and Cineplex is down almost 65%. Cineplex also had the proposed $2.8 billion takeover deal from Cineworld fall through, so that's also one of the major reasons why the stock price has suffered. Price is an important factor to consider when buying and selling stocks, and these divergences will be addressed later on. So, let's start with the time frame, because that's always important when considering making an investment or a trade. I think that cinemas can be a good trade in the medium term and can help you make money. It's all dependent on data and how quickly things go back to normal, but my time frame on this trade right now is about 1 to 2 years. Maybe even shorter, perhaps 6 months if we bounce back very quickly. Maybe not the most likely, but still a possible scenario that I have to consider. Cinemas have suffered tremendously with the COVID-19 pandemic, which makes the cinema sector intriguing as the world reopens. If we look to Asia, especially China and Japan, where COVID-19 cases subsided and theaters reopened, things look promising. There was a substantial increase in demand, with demand actually higher than pre-pandemic levels. In China, December 2020, ticket sales at IMAX's big screen theaters jumped 28% from a year earlier, while in Japan, they broke daily records. A record number of people saw movies on the first weekend of January 2021. Clearly, there was a lot of pent-up demand which surfaced and benefited movie theaters in Asia. And you know what? I've seen this film before. Last year, early in February, there was a sudden spike in the downloads of the Zoom app in China, and the stock at that point was already doing very well, roughly up 30% from the start of the year. But this spike in Zoom usage soon spread all over the world, and the rest is history. It was an absolutely humongous winner last year. There are obviously sector-wide risks with consumer preferences changing and more people preferring to watch films at home. The increase in Netflix and streaming service subscribers over the years is a clear indication of consumer preferences going forward. But I do like movie theaters as a trade. There's a lot of pent-up demand that I feel will benefit the sector. One of the main concerns that most people who are considering trading or investing in cinema companies have is the risk from Netflix and other streaming services. Really the risk of the direct-to-consumer approach and the effects that it will have on cinema companies. And this is a valid concern because it has reduced demand for cinemas over the last decade. Even some of the biggest filmmakers in the world are turning to Netflix for production, like Martin Scorsese, Noah Baumbach, and Alfonso Cuarón. Netflix has become the biggest movie studio in the world, at least when it comes to volume in terms of production over the last several years. And now they plan to release 50 to 60 films per year. And with their pioneering direct-to-consumer approach, the film industry has changed. Cinemas are no longer at the forefront, and the direct-to-consumer strategy is quickly becoming the new incumbent. The DTC approach is taking over, with all the streaming services that have launched. They have taken market share from linear television and have steered consumers away from traditional cinema. However, I still think there is a place for theaters, even with streaming, especially looking at the time frame that I mentioned for this trade. I think now more so than ever, people want to be outside. These businesses will benefit from the change in the near-term consumer trends, with everyone wanting to leave the house. I really believe that the cinema sector is going to do well in North America. If Asia is anything to go by, and I think it is, some of the companies involved in the sector have potential to be good trades. People still want to go to the cinemas, especially when it comes to seeing some of the big budget films like Tenet, for example, that are really meant to be on the big screen. Blockbuster action films with awesome effects are really meant to be seen in a movie theater, in my opinion. The effects in the environment simply can't be replicated at home, especially when it comes to immersive experience films like those with IMAX and 4DX. I really enjoy the cinema and think there is something to be said for being in a big space in a dark room watching a film on a 70-foot screen. It is wonderful to sit in the comfort of your own home, but there is just something to be said for having a community experience. But that's neither here nor there. Moving on, another potential catalyst is the potential for collaboration between theater chains and streaming services. Films like The Irishman, Marriage Story, and The Two Popes all premiered in cinemas prior to their appearance in Netflix's online catalog. This is a really interesting move on their part, especially from an investment perspective, because while you can watch streaming services in the comfort of your own home, movie theater companies are open to the idea of having these films that are produced by the streaming services shown in their theaters. Cinemark has shown Netflix movies in theaters in the past, and there is an off chance that they expand their agreement. This wouldn't just apply to Cinemark, but other theater chains as well, potentially. The big holdup between the streaming services and the theater chains was a disagreement on the length of the theatrical window. But last year, Universal Studios and Cinemark, AMC and Cineplex agreed to a shortened, exclusive window from 74 days to 31 days for major films as defined by box office domestic revenue. This makes it more likely that Cineplex and other streaming services can find middle ground with the cinema companies. It's not all that important a catalyst for the trade, nor is it all that likely, but it's still intriguing and something to consider. A more important catalyst is the release of the next James Bond film. The previous James Bond film, Spectre, grossed nearly $879 million. No Time to Die has been postponed several times due to the pandemic and is due to premiere on October 8th in North America. I'm really excited about the movie and will be sure to see it in theaters, provided it's safe to do so. And I think it will be. This movie really is important for the movie theaters because they have been starved and there have been very few films to show. No Time to Die is going to be a blockbuster and will really help the sector. Something else that is exciting is the recent CDC news in the US. They updated guidance on April 2nd where fully vaccinated people can travel internationally and don't need to quarantine when they return, provided they test negative. This is really exciting, and this combined with the vaccine passport proposal will provide a lot of momentum for cinema companies in the future. Another thing to note, YouTubers, this video isn't investing advice, it's for informational and educational purposes only. Please make sure to do your due diligence. Next week we will dive a bit deeper into these companies and my thoughts on the sector overall and how I'm positioning myself. Thanks for watching, guys. If you guys enjoyed the video, please feel free to like it, subscribe to my channel, and ring the bell for notifications. And until then, stay safe and we'll see you guys soon.